Hey, this is Drew Page. Welcome to the Drew Page channel. In this video, we're going to talk about how undercover billionaire Grant Cardone says you should buy a single family residence. For those of you who don't know, Grant Cardone was one of the stars of Undercover Billionaire. He has over $4 billion worth of real estate at the time of this recording. He's the author of the 10X rule and has been a major real estate player. When it comes to investing in real estate, his number one mantra is that it's all about the number of doors. And so you shouldn't invest in single family homes, but instead you should invest in nothing less than 16 doors and preferably 32 doors. And his rationale is that in order for you to become a millionaire on your first deal, you need at least 32 doors with an increased rent of $200 a month for each door. Or if you have 16 units, you'd have to increase it by $400 a month. So he says the number of doors is what is the path to wealth. But this video says that Grant Cardone is okay with you buying a single family home. Isn't that contradictory? Well, let's see. A few months ago, I signed up for the Grant Cardone Real Estate Summit and attended the summit in Aventura in Miami, Florida. And it was a great time. Grant did a great job, put on a great show, and he spoke a lot about the number of doors and all those things. But in July of 2021, when he had his first real estate summit, before that, he did a series of 6 videos along with 6 coaching calls. And in one of those coaching calls, he addresses the issue of a single family home. Listen to what he says here.
$745,000. I got to put I'm going to have to put $70,000 down in this house because of the price, right? $670. You'll have multiple bidders on this house. Payments are $4,000 a month or thereabout. This guy is probably going to have to compete with an investor that wants to rent this house for $5,000 a month. And I'll bet you he could find somebody that would pay $5,000 a month for this beautiful home. Johnny, can you show this house? Gorgeous house.
Yes, sir.
Now in Houston, in Miami, that house would be 4,300 square feet. How much would this house be in Miami?
How many square feet?
Well, look at it.
$2 million.
Can you see it?
Oh my God.
Yeah, this would be a couple $1 million here, at least, depending on where it was located. If it was on the water, it'd be $12 million.
Okay, clearly we're talking about a single family home. You saw the picture. It's a $750,000 home in Houston, Texas, and he's discussing how much the house would be in Miami. He's not showing an apartment building. He's not showing something with multiple doors. He's showing a single family residence. So why is that important? Because of this.
So the point I'm making to you right now is this. When you look at your marketplace, okay, you can't go build this today. Supplies, you can't even get supplies. You can't get glass. You got a glass shortage in America. You got lumber problems in America. You got lumber's up 90% in some places. Like, it's insane. People are hoarding lumber. You got automobile dealers that can't get their trucks because they can't make chips because of COVID. So you got supply problems everywhere, which has raised prices up, and it could create an opportunity for the guy that could pay $4,000 to move his family into this home. Another investor could say, "Hey, I'll pay $765. I'll pay $765,000. I'll rent it for $60,000 a year, 12 years. I got my money back for the house, and I'll pay cash for it." How's he gonna pay cash for it? Because he don't want to leave his money at the bank, ladies and gentlemen, and earn what? Because you're hearing about inflation, but what you're not hearing is this: the banks have not raised what they pay you by even 1/8 of a point, much less a quarter or a half. The banks are not raising interest rates. And if they're not going to raise interest rates that they pay you, you're going to take your cash out of the bank, or you're going to take your cash away from Fidelity or Merrill Lynch. I think the stock market's off again this morning. It's already. Some people think that we're in a 10 or 20% correction right now. Bitcoin's off 50%.
Grant clearly is underwriting this large single-family home to explain to those viewers that it would be a good investment for them to purchase and then raise the rent level to a $5,000 a month. So that would be $60,000 gross revenue in rent that would then cover the mortgage as well as pay a profit out for the person who purchased it. And he says that the person who would like to live there is going to have to compete against the investor. Now, why would they need to do that if smart investors who have lots of money are only going to invest in multifamily real estate like apartments? And I'm not saying that you shouldn't. I'm looking for apartments myself, but I'm not giving my money to somebody else to do my deal. If other people want to do that, that's certainly fine. But I want to make sure that I'm in control of the asset, and I want to make sure that the asset is paying me the profit, not giving it to somebody else with additional fees and other things. And so he's given this evaluation in a positive way and says that these investors will be buying these up away from the person who's trying to live in there. But he goes even further. Listen to what he says next.
So I'm telling you that to tell you this. If you're not going to get paid any more money, these people that are sitting on cash, trillions of dollars in cash, more cash than I have ever seen in my entire lifetime, and you're going to earn zero, and I've been talking about this. That's your interest rate at the bank. You could go over here and you could go to that house, that same house that you had a $3,000, what was that, $745 payment? He can get a loan on that, right? He get a $550,000 loan on that, put 20% down, and as an investment property, he could actually probably pay 3%. His payments are going to be $16,000 a year, $16,500 a year. He's going to earn $60,000. He's going to put a good tenant in there. He's going to earn $34,000 a year in cash on 20%, $750. He overpaid for the house. He put 20%, $150,000 down. That's his down payment. He's going to earn $34,000. Let's just see what this is. He's going to earn 28.6%. Look, Blackstone is buying single-family homes, ladies and gentlemen, because they can't find a place to put their cash to earn any money. Now, if a group like Blackstone is going to do it, why aren't you doing it?
I think that's a fair question. If Blackstone, one of the largest financial institutions in the world, is purchasing single-family homes, don't you think it's a smart investment for you to buy single-family homes and for me to buy single-family homes? You saw Grant do the math on this, a 28.6% return on investment for purchasing a single-family residence. You do that 16 times and you're going to be a millionaire. You do that 32 times, you're going to make a lot of money. So there's no reason for you not to invest in single-family real estate. So for my personal injury clients who are getting a lump sum settlement and you're looking for a place to park the money, I'm not a financial advisor, but I'm telling you that if I get a lump sum of money and the only thing that's close to me where I can be in control and I can get a return anywhere near 28.6%, I'm using that money to maximize my wealth by purchasing single family, duplexes, triplexes, fourplexes, or an apartment building, whatever I can afford and whatever I can get in my hands in real estate right now. And Grant says you should do it, because if Blackstone is doing it, why aren't you? So don't worry about what other people have to say. If you know that it's a good deal and it's a good investment, stick to what you know, purchase it. It will help you build wealth in the long run. It'll pay you cash flow. You'll still get the same depreciation and appreciation that he talks about in his other videos. And there's nothing wrong with investing in single-family residences. If a multi-billion-dollar United States investment firm is spending money on single-family residences, you know it's not a bad deal. So again, this is Drew Page. I hope this was helpful for you. Please subscribe to my channel and like this video. And stick around. I'm going to answer some other issues regarding investing in real estate as well as other areas of investing. If you found this helpful, please share it with others and put in the comments, do you agree or disagree that a single family real estate rental is a good investment and why? So share that in the comments. And until next time, stay tuned.